Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9. This is where you get everything you need to know to start your day in 90 seconds at 9 o'clock, starting now with news the New Zealand dollar is trading under 81 US cents this morning. This time it's not about us, it's about the US dollar being stronger. The Federal Reserve's more positive outlook for the US economy has helped strengthen the US dollar. Also, people see less chance of a third round of quantitative easing or money printing. Money printing, of course, devalues the currency in which it's done, and that would be the US dollar. This has helped weaken those currencies that have benefited from the inflows of money from the money printers. So that includes the Brazilian real and the New Zealand dollar. Also overnight, Norway cut its interest rates by 0.25% to 1.5%, saying the threat of the appreciation of the krona currency was actually worse than the housing bubble that's developing in Norway. This is a similar challenge to that faced by the Reserve Bank of New Zealand, which warned last week that the high New Zealand dollar was bad for our export sector, and it even talked about a potential rate cut if the New Zealand dollar continued to rise. This is against, perhaps not as serious, but a significant risk in the housing market here in New Zealand. Meanwhile, the S&P 500 is down 0.2% this morning. This is despite calls from a couple of brokers that Apple shares could rise over $700 a share. Apple shares are up 2% in late trade at $581 a share. But everyone's talking about this op-ed in the New York Times by a resigning Goldman Sachs executive, in which he described a, quote, toxic environment at Goldman Sachs. He said it made him ill to hear talk by fellow brokers of ripping off clients they called Muppets. Goldman Sachs has denied the comments. I'm Bernard Hickey. That was 90 at 9 from interest.co.nz.